For the next 20 minutes, I'm going to get a little bit weird. I think the best ideas in crypto really come from sort of thinking outside of the box. And I've spent the last decade in this industry, which is a long time. A decade is a very, very long time to be here. When I started, it was just Bitcoin. And now it's not just Bitcoin, right? There's this huge, vibrant market. There are a lot of use cases outside of capital markets, finance. So today I want to talk to you about what I've spent the last 5 years thinking about, which is my thesis around energy, compute, and crypto, and why I think going back to basics, thermodynamics is foundational to helping crypto find really foundational use cases that are going to make the world a more interesting place. So let's have some fun. Are you guys ready to go on a weird journey? Yes? Okay. Let's get a little weird. Okay, so here we are. Planet Earth. It is the year 2024, and we live on this little dot in this beautiful galaxy in an ever-expanding universe. And, you know, after 10 years of being in crypto, I ask myself often, like, what is the point? We have memed a global reserve currency into existence, and it's called Bitcoin. We've built this $3 trillion asset class. Like, what are we going to do here? And so what I go back to, everyone loves talking about fundamentals and first principles, but when you really think about what economic systems are, what we've been doing as humans, we literally spent the last 150,000 years of humanity focusing on energy, right? And energy, historically, the evolution of humanity has been defined by our ability to consume calories, right? Humans need calories. We consume calories. That gives us energy, and then we apply that energy to building products and making the world more advanced. But now we have this really interesting new force in the form of high-performance computing, AI, the agentic economy, and agents don't consume calories. They consume compute. Now, humans, the more calories we consume, we don't get better, right? In fact, the world consumes probably too many calories. That's why, you know, Ozempic is like a blockbuster drug category. We have too many calories. But what's really crazy is the more energy computers consume, the better they actually get. So at this really crazy point where energy consumption is really what's going to define our ability to grow the global economy. And the global economy is really just about turning energy into other forms of energy. So we're taking caloric energy, computational energy, and turning it into other forms of energy, resources, goods, services. But everything is derived from these thermodynamically constrained resources. Are we all on the same page? All right, so we live in a thermodynamic world, right? We have energy gets transformed into capital and labor, and we turn that into products. And there's this process of investing and consuming, and the cycle goes on. And in the last 100 years, really, so much has changed in the world. And in the next decade, I think the world will look radically different than it does today. So this isn't a physics lecture. Really, what I just want to convey to you is everything we're going to do from this point forward in human history will require compute. Compute requires energy. Therefore, what I'm spending all my time on, everything I'm investing in with my new firm Crucible, is finding funding and building capital markets for energy and compute. That's the thesis, that's the focus. I think that makes sense. So let's talk about it. I'm a smooth brain. Who else here is a smooth brain? Smooth brain? Okay, yeah, most people have like a lot of wrinkles. They have really wrinkly brains. I have a smooth brain. I'm a simple woman. I don't understand complicated things. So this is gonna be a very, very simple framework. All right, so I wanna invest in making the future possible. What does that mean? We need a lot more energy. We need a lot more compute. We're gonna use that to make this cool thing called cryptocurrency, because machines are gonna want digitally native money. And then we're going to build new capital markets and enable all sorts of new financial engineering. And so these vital resources that fuel the digital economy that we are all a part of and that we're trying to build are going to require tremendous capital investment. And we're seeing this, right? Let's talk about capital markets. Let's talk about the stock market. It is a $110 trillion market. If we look at when I started my career, right, I worked in the oil and gas industry. The 10 largest companies in the world were mostly companies that made physical things. So ExxonMobil made oil and gas. PetroChina, oil and gas, right? You have Walmart selling physical products. But most of the companies on this list were focused on physical goods, physical products. And the overall market cap of these companies was $2 trillion. I worked at ExxonMobil. At the time, Exxon was the largest company in the world with a $400 billion market cap. Today, it wouldn't even make it into the top 10 largest companies in the world. Because digital transformation and the advent of the digital economy has fundamentally shifted wealth and power in our world. If we look at the 10 largest companies today, what are these companies doing? They're companies that specialize in compute and digital services. Just this year alone, over 60% of the overall growth of the US stock market comes from one stock. What is that stock? Nvidia. Okay, Nvidia makes GPUs. The market is radically shifting. Also, fun fact, Eli Lilly just made it into the top 10. Eli Lilly makes, obviously, drugs that make you not fat. That's where the calorie story sort of comes full circle. But I think it's just crazy to see how radically the world has shifted, how financialized the world has become, and it's all being led by the rise of this digital economy. In crypto, we like to talk a lot about capital markets and transforming the world. The biggest force that's going to transform the world is compute, the growth of the compute economy. And so what I want to talk about is what role does crypto play? So let's start by talking through the compute value chain. I think it's important to understand, like, what are these actual value chains and how does value get created? So in compute, it's really simple. You have resource acquisition. Nvidia is a CapEx receiver. All of the largest companies on this last page, Microsoft, Google, Facebook, Amazon, they all buy chips from Nvidia, right? So they spend CapEx on these chips. So CapEx receivers are a huge part today of the value chain, and they are the starting point, which is why we've seen the astronomical rise of chip producers. Then we get to infrastructure setup. So you actually have to build a data center. You have to rack your chips. Then you get to the next step. You actually have to electrify that data center. There's not enough energy on the grid to electrify all of the computation that needs to come online. That's the biggest bottleneck. Then we get to the actual process of providing data processing and computation. You have energy management, cooling systems, heat monetization, all of these byproducts that come from computation, because computation is a thermodynamic process. It outputs heat. Then you get to the actual service delivery, and then customer support, because at the end of the day, someone's consuming that compute. Today, the majority of compute is consumed, again, through these hyperscalers, right? Google, Amazon, Microsoft, Facebook. These companies have sort of built in this vertical value chain. They all started more on the service delivery side, but they're now moving up the stack and vertically integrating. They're building their own data centers. They're buying their own power plants. They're putting their own power on the grid. Why? Because they want to dominate this value chain. And I think there's a generational opportunity that nobody's talking about. It's not just about compute. There's a big energy story that's unfolding, and nobody talks about it. But here's a great chart. Goldman Sachs puts out a lot of great free research anyone can access. This is from their latest report on data center electrification and just the generational opportunity in energy investing. We all love talking about the demand that's going to come from AI. What you see here is projected energy demand, okay? Over the last decade or so, energy demand was pretty much flat. With the rise of the crypto economy and now the AI economy, energy demand is on the rise. But the opportunity isn't just in AI. What you see here is growth ex AI, so excluding AI, and then those dashed bars show you the inclusion of AI in energy demand. So if we look at energy demand, it's not just being led by compute, it's being led by EVs, it's being led by the digital economy, it's being led by all of these other verticals that are consuming a lot of energy. Because again, there is no example in the world of an economy that got richer without consuming more energy. So there's this amazing generational opportunity to invest in electrification. And again, I think it's a huge opportunity for crypto. And this is a narrative violation, right? Everyone talks about Nvidia. Everyone talks about the hyperscalers. This is a great chart from the recent Elliott Management Report. If we look at energy versus tech in the S&P since March of 2020, right, so over the last 4 years, what do we see? They kind of grow in tandem, but then in 2022, there's a huge divergence. The blue line is XLE. That's an energy ETF. The orange line is XLK, which is a tech sector ETF. And the black line is the S&P 500. The growth of energy stocks has vastly outpaced the growth of tech and the broader market. Narrative violation. And throughout human history, energy has created wealth. This is why, again, I think it's so important to go back to the foundations of what makes computation valuable. There is no such thing. What you see here, this is a graphic from the World Bank and the International Energy Agency. You see energy consumption on the y-axis and GDP on the x-axis. There is no such thing as a wealthy country that doesn't consume a lot of energy. The US consumes 25% of every electron generated on planet Earth, but has 4% of the people. So this is a story about energy. How efficient are we at finding energy? How efficient are we at utilizing that energy? And how good are we at building financial markets around that energy? Are we all on the same page? Okay. All right, so crypto, we like to think of crypto as this sort of abstract thing that stands outside the physical world. We like to think of crypto in the digital realm. And when people say, like, oh, I invest in infrastructure, they're talking about typically L1s, L2s, purely digital infrastructure. When I say infrastructure, I am talking about physical infrastructure. And one thing that people don't appreciate is over the last decade, crypto has fundamentally changed our physical world. So I'm going to show you some data points. And you can brag to your friends. You can make your AI friends really mad because this pisses them off. All right, we've done this before, and we'll do it again. Bitcoin and Ethereum are digital infrastructure networks, but they're supported by billions of dollars in physical infrastructure. And Bitcoin, Ethereum today support trillions of dollars in annual economic activity. Soon, Aptos will as well. We're on our way. 22 million active wallets. You love to see it. Built different, as Mo just said. So let's be really controversial. The AI boom that everybody loves to talk about would never have reached the magnitude it has today without Bitcoin capitalizing hundreds of billions of dollars of data center build-out, fueled by low-cost electrification, because Bitcoin has a finite block reward. You cannot produce more Bitcoin per block. You have to optimize your cost, which means lowering CapEx, limited ability to reduce the price of chips. So it's really an electricity cost story. Bitcoin is the energy consumer of last resort, and Bitcoin has driven persistent demand for hardware. Over the last 15 years, nobody wanted to invest in hardware. The net new chips we saw came from ASICs, from Bitcoin. Bitcoin miners. Today, there are 24 publicly listed Bitcoin miners, over 20 billion in market cap, and global Bitcoin hash rate is 750 exahashes. Huge. Here they are. That's crazy. You have multi-billion-dollar companies that have been built on data centers for Bitcoin. Let's talk about Nvidia. Everybody loves to talk about the AI story, but when did Nvidia really start diverging from Intel? 2020, Ethereum mining boom. In 2020, the first big sort of rise in Nvidia's stock price was pretty much steady growth, and then there was this insane spike because people started buying GPUs to mine Ethereum. So Nvidia's meteoric rise, I think, can be partially attributed to the rise of Ethereum. Crypto changing the physical world. Seagate, who here has heard of Seagate? Okay, my nerds. All right, Seagate makes SSDs, solid-state drives. Seagate rode the Chia wave to glory. Seagate saw a huge uplift. You couldn't buy SSDs for a while in 2021 because everyone was plotting Chia and Filecoin. So crypto has already started to impact the demand for physical products, for computation, for storage, for connectivity. The story is there. We are just not talking about it. And the story is only going to get bigger and bigger as crypto's impact on the world and its reach into different economic sectors continues to grow. And to me, the Bitcoin story was just the beginning. I made this graph. It's not great, but it will work. So what I'm showing here, who's familiar with the S-curve? Yeah, okay, so the S-curve basically is a story of adoption. What you see on the x-axis is time, right? The arc of time is very long. And then what you see on the y-axis is market penetration. So Bitcoin for a long time was a maligned, ignored sort of project. People didn't really pay much attention to it. When I started working in Bitcoin, people were like, what are you doing with your life? Bitcoin's for criminals. Bitcoin is now global reserve currency, and I think Bitcoin is becoming a mature asset class, but really the story over the last decade has really been about the financialization of Bitcoin. That's the story. We have spot trading, derivatives, ETFs. We have public companies like MicroStrategy. 22% of US adults own Bitcoin. So from an adoption and market penetration perspective, I think the only use case in crypto that really has seen material market penetration is the story of Bitcoin as a financial asset. But most people today interact with Bitcoin through a centralized exchange, an ETF, a custodian. There is a bigger story. I think crypto's biggest market is not you and me. I think crypto's biggest market is the machine economy, the agentic economy. Whether those are physical robots or fully digital agents, I think the biggest market for crypto adoption is going to be the rise of the machine economy and the rise of the agentic economy. And so the age of machines, in my view, is going to require cryptocurrency, and is going to require a tremendous amount of energy and computation. And so really what we're seeing here is a new market narrative that's unfolding. So where does this all lead to? Why am I talking about this? What I'm really excited about, and what I think the big opportunity will be for crypto, is building new financial markets. There is nothing new under the sun. If you can name it, you can trade it, and crypto is incredibly good at enabling the creation of capital markets around pretty much anything. We're now trading predictions on-chain. We're trading memes on-chain. Who knows what else we'll be able to trade? But my view is the two things we should really be trading on-chain are energy and computation. So what does that mean? Well, market structure is broken. Basically, the way that financial markets work, and this is why crypto is so powerful, is you have all of these different brokers and financial intermediaries, and they have this whole process they go through. You have price discovery, where you figure out, what is this trade going to clear at? You execute the trade, you margin and clear, you settle, you reconcile, the trade is done. But all of that data is pushed manually between all of these different brokers, and that's how we figure out who owns what, right? It's not very efficient. Crypto turns all of that process, right, all of these different intermediaries just copying and moving data entries between one another, it turns it into one sort of execution layer where you have the infrastructure layer where settlement and consensus happens, you have a networking layer, and then you have an application layer. And you have governance embedded in this and execution embedded in this. And I love this idea of a big hot ball of money, right? Today, when you trade something, the US just went from T+2 to T+1. Basically, you trade something 2 days later, that trade settles in your account. In March of this year, we went to T+1, which means it settles in 1 day. Crypto is T immediate. It settles immediately, on-chain, without any intermediaries. That is a profound shift, and I think it's going to radically change how we think about markets. It already started to, but it's not about making ETFs. It's about moving money, value, assets at the speed of light, right? Basically as quickly as your blockchain can execute. And that's why Aptos, I think, is so exciting and such a novel push forward in what we can do with this big hot ball of money. And what that means is liquidity, instead of being fragmented and split between these different brokers and taking days to move, money moves immediately. You can hold it in stable coins. You can hold it in any asset you want. You can easily move it around. That's exciting. So what does that mean for energy and atoms? Well, this is a very basic model. It's one you're going to be hearing a lot about because I'm going to talk the shit out of it for the next decade. This is the OSI model. Okay, if you're a networking person, you know the model. Basically, the way our digital world gets constructed, when you send a transaction on chain, you push some buttons and stuff happens, and you're like, cool, executed. But there's actually a lot that's happening behind the scenes, right? When you're transmitting data, you're accessing an application. That application translates, encrypts, and compresses the data. There's an session that's activated. That data is transported using open source protocols like TCP/IP is the best known one. In crypto, we have our own protocols that do that. And then there's an actual physical hardware layer. There's a physical pathway that data takes. Today, that's still largely done via wire. We're starting to see more satellite, obviously, but we're literally dependent on copper wires that run under our oceans to transmit data. That's a crazy concept. I don't know if you've ever thought about that. It really messes with my mind. There's a data link, and then there's the actual physical bit stream that's transmitted over medium. and there's actual computation somewhere. There's a semiconductor plugged into an electrical source that is doing computation. In crypto, we only talk about the software layer and the network layer, but the hardware layer is where the big opportunity is at. And for me, I think blockchains can serve as the operating system, the capital market, and the coordination layer for this hardware layer that doesn't get talked about. I think that is what the next decade of crypto will be about. Okay, so then what does that mean for markets? Well, I started my career as a trader in the oil and gas industry. And we really just need to look at the last 20 years of the oil industry to understand where crypto is headed and how it will impact physical assets and the way we trade them. So when oil first started to trade, it was a physical market. You actually took physical delivery of barrels of oil. Even derivatives in the early days were tied to the underlying. The market dynamics then are driven by supply and demand, and obviously liquidity is constrained to the physical supply of oil that's available. Your risks in this instance, right, your market risk if you trade oil, it's logistics and storage. If there's a war that breaks out, which we saw a lot of that in the 70s and the 90s, there are these really big sort of structural impacts on market pricing. We then saw a shift to paper markets. In paper markets, you create these synthetic financial instruments, like derivatives, and they allow you to speculate on prices. So all of a sudden, I'm untethered from the underlying physical because there's no physical delivery. What that means is market dynamics also shift. All of a sudden, prices become more affected by macro factors. What's happening to interest rates? What's happening to the global economy? What's the outlook for GDP? Obviously, geopolitical factors can be priced in more easily. Is there tension in the Middle East? Is there tension in Russia? Russia is one of the largest oil producers. And most importantly, we can express sentiment, right? The market is a sentiment gauging machine. So all of a sudden, with paper trading, we can express sentiment in new and novel ways. What that means for liquidity and volume is it's unconstrained liquidity and unconstrained volume. The capacity of the market can basically be responsive to demand from both physical traders, but also purely financial traders. And the risk now becomes price volatility. Are you still with me? We're getting like really in depth here. Okay. You're gonna leave and be experts on oil trading, which is dope. All right, so what happened to oil markets? Oil companies were trying to navigate the complexity of a high CapEx, high OpEx business. Today, compute is an incredibly high CapEx, high OpEx business. You spend a shitload of money getting a data center online, buying your GPUs, buying your ASICs, buying whatever your HPC, high-performance computing chip is. You then have to run it, and your OpEx, your operating cost, is also really high. You have to pay for electricity. You have to operate the data center. You have to deal with customer service. In the face of extreme price volatility, high CapEx, high OpEx businesses do not fare well. Today, every oil company in the world is also an energy trading firm. And the majority of profits at oil companies don't come from actual production, they come from trading. Compute and energy are headed the exact same way. Compute is going to become a trading business. I'm going to tell you how, but that's going to happen. And so where we started really with oil is we started with optimizing, selling, and buying as a producer of oil. This is called hedging. Right? Today, firms that operate in the compute value chain have very minimal ability to hedge. Maybe you can hire Mercuria. Mercuria is a commodities market making firm. Maybe you can hire them to buy a hedge for you on power prices. But outside of trading power, there's not really a great way to hedge compute. Then you get to optimizing the value chain. That's the vertical integration with hyperscalers that I talked about earlier. You move either up into the value chain. Apple started making its own chips, right? They started with the M1. We're now on the M2. Facebook is putting their own data centers on the grid. They're buying power plants. They're buying solar farms. They're buying nuclear capacity, which is crazy. So they start optimizing the value chain, moving both up and moving further down into the value chain, becoming a hyperscaler. They're actively physical trading. In compute, there's no physical to trade. It's purely digital, and there's no storage cost. So it's like a really great asset to trade. Then they start arbitraging. They're like, hey, wait a minute. We own all of this compute. We have all of these megawatts of power. How do I arbitrage this to make more money. And then lastly, where you get to, the thing that crypto does so well, so beautifully, so perfectly, purely financial speculative trading. This is the holy grail. This is the world I dream about. This is the world that excites me. How do we speculate on the future of compute markets through the use of derivatives? And how do we construct portfolios to exploit arbitrage opportunities? Purely speculative market. That's where compute is headed. Whether it takes 5 years, 10 years, 15 years, don't know, don't care, is going to happen. And my job with all of you and everyone in the crypto ecosystem is making sure that those markets get built on-chain. That really excites me. I don't know if that excites you, but like, that is very exciting to me. Let's go and do that. And liquidity rules everything around me. Okay, this is a chart I made with Perplexity. I'm very proud of myself. Basically what it's showing here, there's a green line. I don't know if you can see it very well, but over the last 25 years, we started out with the physical oil trading market and the paper oil trading market, i.e. the purely financial trading market, being sort of at parity. Over the last 25 years, the paper trading market now exceeds the physical trading market by a factor of about 30x. Okay, so think about the compute economy today. How big is the compute economy? Let's say, I don't know, we had that slide earlier, 10 largest companies in the world. Let's say 6 of them are hyperscalers. They probably have, like, you have the magnificent 6, right? It's Apple, Nvidia, Facebook, Google. All of those together, let's say, have a $10 trillion market cap. Purely physical. They're actually delivering compute. If we multiply 10 trillion by 30, what do we get? Fuckload of money. Those are the markets we need to be building. That's what's exciting to me. So what I really want to convey to you is I think we're at the start of a new era where commodities will be created fully on-chain. Commodification is just the process of turning something into a standardized tradable asset. Today, compute is not commodified yet, right? Digital infrastructure is still in the very early stages of commodification, and I think compute networks like Render and Akash are the first to sort of attempt commodification. But what we're going to see is blockchains enabling the creation of discrete units of digital resources like compute that can be bought, sold, and traded in new and novel ways. And I think we're going to see that repeat itself across every digital infrastructure vertical: compute, connectivity, storage, whatever else may come next. So let's talk about it just in context of what's happened in the last 15 years of compute and what's led to this growth of these magnificent 6, magnificent 7, that again made up 113% of stock market growth in the US this year. 6 stocks, 113%. That means the other 494 stocks in the S&P 500 actually went down. That's wild. Okay, so we started with on-prem bare metal, right? So if you wanted to do compute of any kind, you'd have really high capex. You had to buy chips, you had to build your data center, you had to electrify. It's really prohibitively expensive. Then you have to actually manage that bare metal, right? You have to hire people, they have to monitor it, they have to run it. You have to have large-scale power purchasing capacity, and you can't really hedge or control your costs. You're sort of locked in. You have to own what you utilize. Then came cloud, right? And cloud was really amazing at unlocking a whole new generation of applications because all of a sudden, you didn't need any CapEx to get started. You don't have to buy anything. You just go online, right? And you procure whatever computation or storage you need on demand via EC3 or S3. And you could really quickly start. And your OpEx would scale as your consumption scaled. This made compute more commoditized, and it led to a loss of leverage, right? Who here has an insane AWS bill? Yeah, it's chaotic. There's actually a crazy statistic, like for monthly storage right now, if you use NVMe storage, which is basically like next-gen storage, your monthly cost is going to exceed the cost of buying the hardware. That's insane, right? So the cloud economy has been really, really beneficial for hyperscalers. For consumers, not as great, because you have this lock. It's not really very. And hyperscalers, as a result, dominate the digital economy. Where are we going next? Crypto's changing all of this. If we mix together DePIN, DeFi, and RWAs, or real-world assets, all of a sudden, a wide range of operators can now provide compute supply to these distributed networks. There's all of these new middleware and orchestration tools and layers that are streamlining and aggregating both supply demand, and they're allowing fine-tuning of costs by utilizing network tokens. Again, this is the trend I think will continue all of these new digital commodities that are going to drive the growth of this new era of human progress with the machine economy. So again, this compute value chain, first it was disparate layers. Now you have the hyperscale. And how does our economy function? We aggregate, like every 15 years we bundle, and then the next 15 years we unbundle. So for me, the next 15 years, we're going to start unbundling this hyperscaler value chain. And again, every layer of this stack has the opportunity to be disintermediated by the fundamentals of how crypto networks get built and traded. And so my investment framework is really simple. In any business, there are only 3 levers you can utilize. Number 1, technology innovation. So we have new protocols that are bringing resources on chain. We have meta protocols and tooling to streamline payments. We have new hardware. We have new routing topologies. Then we have operating leverage. How do you get better at operating at lower cost? So this is optimization software, energy management tools, fleet management, routing, aggregation. The last layer, and the layer where I think crypto really shines, is financial engineering. How do I hedge, arbitrage, and actually access capital at very low cost, create new and novel financing structures to split CapEx apart, distribute those income streams as tokens, create a forward curve to reduce volatility in dollar terms, and then build these novel new instruments to balance supply and demand. Like that to me is the holy grail. Those are the 3 things that I think we can actually tangibly do with blockchains. So here's my North Star. Let it be your North Star as you start thinking about what to build, where to invest, where to spend your time. Human progress has always been predicated by our ability to manipulate energy and atoms over space-time. The most obvious use case for blockchains, in my view, is to find, fund, and facilitate the most efficient use of thermodynamically constrained resources at civilization scale. And today our civilization is planetary. In the future, it may be intergalactic. And if so, we need to beat all the aliens to get all the energy and all of the compute and all of the matter under our control. That's a little bit of like fun, weird sci-fi thing. So that's it. If you want to build in this space, if you want to talk about it, here's a QR code. It links to my contact information. I will put all these slides online as well. But hopefully that gives you a slightly different take on what I think the future of the crypto economy will look like. And I'm excited about it. This is what I'm doing with my life for the next few decades. Come join me in building it. It's going to be a crazy time.